Okay, so you sent us a bunch of articles about Bitcoin taking a nosedive lately.
Yeah.
And we're kind of seeing a lot of chatter about, like, what's the deal? What's behind it? Is this just like a blip, or we're looking at something bigger?
Right.
It's interesting, too, because this isn't just your run-of-the-mill market dip. You know, we've got, like, geopolitical fireworks, whispers of comeback, and Bitcoin ETFs are doing their own thing.
Right. It's like someone hit the market blender's pulse button, just like a little bit of everything thrown in.
Exactly.
Yeah.
So let's untack this.
Okay.
First off, Bitcoin dipped below $60,000 this week.
Yeah.
And FX Empire is pointing out that's the first time since mid-September.
Right.
We've seen it go this low. Now that seems to have everyone on edge.
It is a pretty big deal psychologically. That $60,000 mark has been kind of a line in the sand for a while now.
Right.
And breaking it tends to make investors nervous.
Yeah.
What's fascinating, though, is FX Empire's observation that Bitcoin is really charting its own course right now, even compared to the broader crypto market.
Right.
It's like everyone's looking around wondering, is it just us, or is it getting chilly in here?
Right. Right.
Yeah.
And to make things even more interesting, we've got all this geopolitical drama unfolding.
Oh, yeah.
Iran launching missiles at Israel is definitely not helping the whole risk-on vibe.
No kidding. The Economic Times, FX Empire, both point to this conflict as a major factor in investor jitters. And it's not just the immediate strikes, right? It's the uncertainty of what comes next. How will Israel respond?
Right.
Will the U.S. get involved?
Yeah.
These unknowns create market anxiety, and we see that reflected in things like rising oil prices.
Right.
A classic indicator of uncertainty.
Classic. Yeah.
Yeah.
So we've got investors looking for those safe haven assets.
Right.
But here's the thing. Bitcoin isn't exactly playing by the traditional safe haven rules.
You hit the nail on the head.
Okay.
Standard Chartered makes this really interesting distinction. They're saying, look, Bitcoin might be a hedge against systemic financial meltdowns, like a bank collapse or even issues with the U.S. Treasury.
Yeah.
But when it comes to geopolitical uncertainty, not so much.
Which is interesting.
Yeah.
Because CryptoSlate points out that during the whole Silicon Valley Bank fiasco,
Right.
Bitcoin actually held up pretty well. In fact, it even outperformed traditional safe havens like gold.
And that's a great point.
Yeah.
It seems like the nature of a safe haven really depends on what kind of storm you're trying to weather.
Okay.
So for you, it's about understanding what kind of protection you're looking for. Are you bracing for a financial earthquake? Or are you battening down the hatches for a geopolitical hurricane?
That's a great way to put it.
Yeah.
Okay, so we've got the geopolitical storm brewing.
Right.
But FX Empire is also highlighting another potential hurricane on the horizon.
Okay.
The U.S. jobs report.
Yeah.
Apparently, this could make or break Bitcoin in the short term.
Absolutely. The jobs report is a key indicator of the overall health of the U.S. economy. And right now, the market is looking for clues about what the Federal Reserve might do with interest rates.
Because a strong job market equals higher interest rates.
Right.
Which usually means bad news for Bitcoin.
Right.
But remind me why that is again.
Sure. So when interest rates go up, it becomes more appealing to park your money in less risky assets.
Okay.
Like bonds, or even just good old-fashioned savings accounts.
Right.
Suddenly, that guaranteed return starts looking a lot more attractive than the volatility of the crypto market.
Right.
So even if you believe in the long-term potential of Bitcoin,
Yeah.
higher interest rates can dampen the mood.
Yeah. Yeah.
Yeah.
And speaking of dampened moods,
Right.
FX Empire mentions that while economists are expecting steady unemployment numbers,
Okay.
there's a chance we might see weaker job growth than anticipated, which might explain why we're seeing some big moves in the Bitcoin ETF space. Specifically, IBIT, that big Bitcoin ETF from iShares,
Right.
just saw some pretty significant outflows, apparently only the fourth time that's happened since it launched back in January.
And it's not just IBIT.
Oh, really?
FX Empire reports that overall, Bitcoin ETFs just had their largest outflow since September 3rd.
Wow.
That being said, it's not a completely uniform picture.
Okay.
There are some contrasting data points here.
Okay.
Fidelity's FBTC actually saw inflows,
Okay.
while Grayscale, the GBTC folks, had basically neutral flow.
Interesting.
So it's not a mass exodus,
Right.
but it's definitely something to keep an eye on.
Something to keep an eye on, yeah.
Yeah.
It's like everyone is playing ETF roulette.
Right.
Will it be red or black, inflows or outflows?
Yeah.
This market is wild.
It certainly keeps us on our toes, but even with those outflows, it's not all doom and gloom.
Okay.
Standard Chartered, while acknowledging the current geopolitical anxieties are pushing Bitcoin down, points to an interesting trend.
Okay.
They say the increasing likelihood of a Trump presidency actually seems to have a positive influence on Bitcoin's potential post-election.
Wait, hold on.
Yeah.
Trump's potential return is actually seen as a positive for Bitcoin.
Yeah.
That seems counterintuitive given the overall risk-off sentiment we're seeing.
Yeah.
Break that down for me.
Yeah, it's all about market psychology and historical context.
Okay.
You see, Trump has generally been perceived as more crypto-friendly during his previous time in office.
Right.
So the market might be betting on a potential repeat should he be elected again.
So it's not necessarily about endorsing any particular candidate.
Right.
But more about how the market might react based on past behavior.
Exactly.
Gotcha.
CryptoSlate even dug up data from Polymarket showing Trump closing the gap against Harris in the election odds.
Interesting.
Now, we're not here to make any predictions about who's going to win.
Right.
But it's a fascinating example of how even political events can send ripples through the crypto market.
Okay, so we've got a lot to consider here.
Yeah.
Geopolitical tensions, potential interest rate hikes.
Right.
Election jitters.
Yeah.
It's like the market is trying to juggle chainsaws
Yeah.
while riding a unicycle.
Yeah.
Is there anything we can look at for a bit more clarity? Maybe those charts everyone is always talking about?
You mean technical analysis?
Yeah, absolutely.
Yeah. FX Empire actually did a really nice job breaking down some key indicators.
Oh?
Right now, Bitcoin is trading below its 50-day moving average.
Okay.
And now, for those who don't speak charties,
Right.
that basically means the price has been trending downwards in the short term.
Okay, so short term, not looking so hot.
Right.
But what about the bigger picture?
Well, that's where things get more interesting.
Okay.
You see, while Bitcoin is below that 50-day moving average,
Right.
it's still holding strong above the 200-day moving average.
Okay.
And that, my friend, is a good sign for the long-term outlook.
So it's like a hold your breath and see situation.
Exactly. Think of those moving averages like trend lines.
Okay.
Breaking above or below them can signal a shift in momentum.
Right.
Right now, Bitcoin is caught in between.
Yeah.
It's like being in the eye of the storm. It's calm now, but, things are about to get intense again.
And everyone's trying to figure out which way the wind will blow next.
That's the $1 million question, or should we say the $60,000 question?
Yeah.
Given Bitcoin's current price point.
Huh. Touché.
Yeah.
But you're right. It all comes down to which way the market's sentiment swings. Fear or opportunity.
Speaking of opportunity, remember that surge in Bitcoin options activity we mentioned earlier?
Yeah.
CryptoSlate and Decrypt both highlighted the increased open interest for those call options with an $80,000 strike price expiring in December.
Hold on. Remind me again what that means in plain English.
Essentially, it means some investors are placing big bets that Bitcoin will not only recover from this dip, but will actually skyrocket past $80,000 by the end of the year.
Wow. Those are some seriously optimistic or maybe just wildly speculative investors?
Perhaps a bit of both.
Yeah.
But it highlights that even in the midst of all this uncertainty, some people see this dip as a prime buying opportunity.
Okay, but how do we make sense of all this? It's like everyone is seeing a different future for Bitcoin.
That's the beauty and the challenge of the crypto market.
Right.
There's no crystal ball.
Yeah.
What's fascinating here is that we're seeing a real clash between fear and opportunity.
Right.
On one hand, you've got geopolitical turmoil, the potential for interest rate hikes, and even some ETF outflows, all fueling this perfect storm of uncertainty.
Right.
But on the other hand,
you've got investors loading up on those $80,000 call options, betting on a Bitcoin comeback story for the ages. So which is it? Are we headed for a crash, or are we about to blast off to the moon?
It's a classic tug of war. And right now, it's anyone's guess who's going to win.
Right.
But that's what makes this such a fascinating deep dive.
Yeah.
It's not just about deciphering charts and graphs. It's about understanding the psychology of the market.
Right.
Remember those expert opinions from the Economic Times?
Yeah.
They're a perfect example of this.
Okay.
You've got Satvik Vishwanath pointing out that Bitcoin actually had a phenomenal September. Its best in over a decade, despite these recent hiccups.
So even with all the drama, there's still some underlying strength.
Exactly. And then you have Vikram Subbaraj reminding us that those key support levels are crucial.
Yeah.
He's saying that for Bitcoin to avoid a deeper slide, it needs to hold that $60,000 line in the sand.
That $60,000 mark is starting to sound like a magic number.
It's certainly a psychological barrier, and Edul Patel, also quoted in the Economic Times, seems to agree.
Right.
He's flagged $60,000 as a key level to watch.
Okay.
But then you've got analysts like FxPro's Alex Kuptsikevich taking a broader view.
Okay.
He's tying Bitcoin's stagnation directly to this global risk aversion we're seeing.
Okay.
It's like the entire market is holding its breath, waiting to see what happens next.
So it's not just about Bitcoin. It's about the whole financial world feeling a bit shaky.
Precisely.
Yeah.
And that brings us back to you, the listener, because in the middle of all this uncertainty, the real question is, what kind of investor are you?
Okay.
Are you someone who sees volatility and runs for the hills? Or do you see it as an opportunity to potentially buy low?
It's that classic dilemma.
Right.
Risk versus reward.
And that, my friend, is the million-dollar question. Because while we've explored all these factors, the global landscape, the economic data, those intriguing technical indicators, the ultimate driver of Bitcoin's price is investor sentiment.
Okay.
What do people believe?
Right.
And how strongly do they believe it?
So if we're looking for clues about where Bitcoin is headed next, where should we be paying attention?
Keep your eyes on those ETFs.
Okay.
Their flows, those inflows and outflows are like a window into the minds of institutional investors. If we see continued outflows, it could signal a deeper retreat. But if those inflows start picking up well, that might suggest the big players are starting to see this dip as a buying opportunity.
Okay.
A chance to load up on Bitcoin at a discount.
It's like they're waiting to see who blinks first, the bulls or the bears.
Exactly.
Yeah.
And as we've seen today, there are compelling arguments to be made on both sides.
Right.
This deep dive may be coming to an end, but the story is far from over.
Right.
The confluence of global events, economic indicators, and even political outcomes we've discussed.
Yeah.
They're all shaping the future of Bitcoin, whether it dips below that $60,000 mark or surges past $80,000.
So what you're saying is buckle up.
Yeah.
Because this wild ride is just getting started.
You got it.
Yeah.
And as always, the most exciting part is that none of us know for sure where we'll end up, but hopefully with the insights we've uncovered today, you'll be better equipped to navigate the twists and turns along the way.
Absolutely. And thanks for joining us on this deep dive.
Yeah, thanks for having me.